Welcome to Vacation Rental Mastery, where your host, Karan Narang, guides you through harnessing vacation rental investments. Whether you're new to vacation rentals or expanding your portfolio, this podcast fuels your path to freedom. Join us in this movement to transform your life. Ready for change and legacy building? You're in the right place. Let's embark on this freedom journey and master vacation rental investing together.
So, Zach, thank you very much for joining me on this episode of the podcast. Our podcast is called the Vacation Rental Mastery Podcast, where we focus on helping people achieve the five freedoms, which are basically time freedom, financial freedom, location freedom, relationship freedom, and impact freedom. So I appreciate you being here today. Please give us a little introduction about yourself and who you are.
Yeah, so my name is Zach Dixon, and in the multifamily rental space, we do have one short-term rental. We bought 2 years ago, a little over 2 years ago. But yeah, primarily multifamily mobile home parks, and so that's kind of what we do. Been doing it since 2017.
Awesome, that's spectacular. Now, you mentioned you've been doing it since 2017. What did you do prior to that?
I was actually in law enforcement.
Oh, awesome.
So I was a detective in Colorado and did that for almost 7 years.
That's spectacular, and thank you for your service, man. Law enforcement.
Oh, thank you.
Respect for you guys. So
Yeah.
thank you for doing that. And so, what made you switch? What's the pivot? You know, there's obviously something that occurred in your life that made you pivot into real estate. How did that happen?
So I started doing real estate. My wife and I started doing real estate while I was working at my job, actually. And big thing is, at first, it was just going to be kind of one of those things where supplemental income, get to a point maybe at retirement. At that time, I saw myself staying at my job for, unfortunately, I was thinking I'd be there for 15, 20 years. And that this would just be like a side income and kind of a supplemental retirement. As we started growing within the first year or so, started listening to some podcasts, Bigger Pockets, obviously, reading a lot of books, and realized that maybe I could accelerate that and actually not have to go through 15, 20 years in law enforcement. A big thing was looking around at a lot of my coworkers and seeing the guys that had been there for 10, 15, 20 years. And they were, not only health-wise, but financially, they were not where I saw myself being ideally. And so I wanted to, switch that. I knew that we wanted more financial freedom, more time freedom. That was a big one. Kind of do what you want to do, when you want to do it, where you want to do it, with who you want to do it. And so that was like the big pivot, I would say, is when we realized, like, oh, wow, we can do this. We kind of got down a system of buying, not really, we flipped a couple properties, but really just the buying, they always say you make your money when you buy. So if you can buy a good deal, do a little bit of work to it, refinance it, and just keep repeating. And so once we got to the point where the rental income well exceeded what I was making, probably by 3 or 4 times.
Wow.
We started kind of realizing, like, okay, wait a second. Now at this point, it's kind of just I'm in a sense wasting time, right? Like I'm going to this job for sometimes 5 days a week, and could be putting all that focus on the real estate side of things that actually paid more money and gave us substantial freedom. So I pulled the plug in end of 2021. And yeah, since then it's been great. Continued to grow. It's been absolutely life-changing.
That's awesome to hear. It's funny you say that. So, Tony Robbins says, where focus goes, energy flows, right? That's the most fundamental thing.
Yep.
And one of the things that's absolutely, people don't necessarily understand it, but I've only discovered very recently in my life, because I quit my job December 31st, 2023. So I'm like 3 months into quitting my
Okay.
job, right? This is month three, a full-time W2 job that I made, a big number, and
Yep.
walked away from it. And I realized that this is liberating. It
Yeah.
gives me the freedom to live my life the way I want it. I've had
Exactly.
freedom for a little bit, but it's like this brought in all these other things that I could do, since then. And you look at it, it's 8 weeks into the year, and I just look at
Yep.
this 8 weeks, and the amount of stuff I've done and accomplished far exceeds anything I did while I was working in 8 weeks. It's 6 months worth of stuff I do in parallel with when I was working with my full-time W2 job. And I think there's
Yep.
very few people, unless you've really done it, it's very hard to understand what that walking away from the W2 job does to your mindset, to
Exactly.
your behavior patterns, and to the action you take. It just
Yep.
kind of frees you up. It kind of unleashes you to take that next level. And it sounds like you've been through that.
Yep. Yep. That's awesome. What industry were you in?
So I was in the pharmaceutical supply chain consulting industry. So
Okay.
very, very high, um, you know, very high travel requirements,
Yep.
being on the road, dealing with a lot of different clients. I missed out on so much in these 12 years of me being in that
Yep.
industry. I was never home. My kids are now 9, 9, and 11, which means I missed like 10 years of their lives. And if you don't
Exactly.
really know this, and unfortunately I've only learned this now, is that 80% of the time you will spend with your kids in your lifetime is in the first 10 years. So
Oh wow. Yeah.
if you count that, hey, I've got
Yep.
10,000 hours to spend with my kids in my lifetime, 80% of that is in the first 10 years, because again, they're babies, they're in your arms and they're with you. But as they grow up, the amount of time goes down and down. The annual time you will spend with your kids go down. Once they graduate, go to college and go away, maybe you're spending, you're not spending 1,000 hours a year, right? You're spending,
Right. Yep.
I don't know, 40, 60, 80 when they come home from college, when they're taking a vacation from job, once they have their families. So the time through your lifetime, the time that your kids will spend time with you is only going to decline. So 80%
Exactly.
of the time that they will spend with you in your lifetime is in the first 10 years. And then I was like,
Wow.
this is crazy. What am I doing? Yes, I made a lot of
Yep.
money. It was good money, and I'm grateful for that. But the price paid was actually pretty high, right?
Right. Yep.
So people, it's been so liberating for me. It's been awesome. So it sounds like you were very successful in making this change and pivoting away from this law enforcement career to real estate. What's interesting is you mentioned to me you're primarily in multifamily and mobile home parks, but you also said
Yep.
you have one vacation rental.
Correct. Yep. So
So help
we
me understand.
so as far as the vacation rental,
Yeah, help me understand what, I usually find people, either get into a space and stick to the niche because they develop the expertise, but you're in kind of three
yep.
different areas. So help me understand what that thinking is.
So we started in single family, very quickly moved to multifamily and then mobile home parks. I like both the multifamily and mobile home parks. I kind of consider them one and the same in a sense. They both have their I guess place. Multi or mobile home parks I love for the obvious reasons, especially if you can get the right system, the right setup as far as where you're basically leasing the land.
Yeah.
So that's that. Multifamily traditional apartments, I like, they tend to appreciate more, I would say. And just depending and then our one single family or our short-term rental, really the where that stems from is our goal was, and so we go from working, never being able to take, unplanned vacations, right? I mean, we would get, the vacation, the time off was very good, but it still doesn't give you true ultimate freedom. And like you said, when you have young kids, I have 3 kids, 7, 12, and 15. and you start losing that time, and you realize like, hey, I'm not going to ever get this back, and I don't want to work a job where I get a few weeks a year vacation, and you have to plan it out. Like I want to be able to do more spontaneous stuff and vacations and spend more time, in true freedom. And so one of our goals was to be able to kind of split our time between Colorado and Florida.
Okay.
And so we started looking at, houses in the area we wanted to be in Florida. And so that's actually where we're at now, is in Florida. So now we kind of spend the winters here in Florida. And then when we're not here, it's actually the busy season for this part of Florida. So then we short-term rent the house. So it's not I would say the short-term rental is not necessarily a business that we intentionally got into. It was more of like, hey, we want a house here, but we want it to pay for itself when we're not using it.
So this is actually, a very important point you bring up, right? Usually when I'm working with my coaching clients and they want to say, oh, I want to go buy this short-term rental, I want to get into this vacation rental space, I want to do all this stuff, it's very important to differentiate between an investment and a lifestyle asset.
Yep.
What you did is you built up enough resources, your real estate and your income coming in, and you said, hey, you know what? I want to do things a little differently. I want to take my freedom to the next level. And you got location freedom because I want to work from a different place for half the year. So that's what you did. You bought a lifestyle asset the smart way. A lot of people basically say, I'm just going to go buy this place because I want to spend time there. And they're not necessarily thinking about, hey, maybe it can pay for itself, right? So in your short-term rental is essentially a lifestyle asset which you're getting personal joy from, versus trying to maximize the revenue and maximize the profitability from, which is absolutely spectacular. Like I said, a lot of investors, a lot of people getting into this space have a very hard time wrapping their head around it, because the trigger for a lot of people to even get into the short-term rental or vacation rental space is, I would love a place for myself to go enjoy when it's not in use, right? So that discussion literally starts with that confusion. And it takes a little bit of explaining that, typically when there's a place we want to go stay and enjoy a vacation, it's probably not going to cash flow or be such a good investment, right? Because again, you're at a stage in life when you're able to spend a little more money to go spend and do things there and go to nicer places that are really nice or whatever. And the returns on like the top notch, you go buy a $5 million mansion and try to expect for it to cash flow and make good money is likely not going to work that well, right? No, you bring up a very important point for people listening to this show. It's important to note that you differentiate between the lifestyle asset and the investment, right? So that's absolutely spectacular. Okay.
Yeah, and for us, like I said, it was more of the lifestyle asset. It was not. And now, having said that, once owning one, if you can get it in the right area, I could see it becoming an investment, right? If you were to buy more of them and want to go that route and scale it, there's definitely, and then you contrast that with multifamily. And my wife and I, we have an in-house management team, and we would rather manage short-term rentals than long-term multifamily.
Man, I'll tell you, a lot of people have a hard time comprehending this. In your case, you seem to have realized kind of you've gone a little longer way to say, wait a minute, I'm going to buy this lifestyle asset. The cash flow sounds like it's pretty good. And you're like, wait a minute, for as much work and effort that I'd had to put into multifamily or in mobile home parks, the return on your time and the effort on the short-term rental seems to be higher, right? And I try to help people understand this, right? I have nothing against multifamily and mobile home parks, and I hope to own multifamily myself at some point in my life. How old are you, Zach?
36.
So you're 36. At 36, you've achieved this financial freedom, you achieve location freedom and time freedom, and you're in that growth stage of your life, right? Probably the next 10 to 15 years, you're in that growth stage of your life, and you're probably looking to accelerate the growth as much as you can. And I usually, the way I coach people is I say, There's nothing wrong with multifamily, right? Go do it. The difference is
Exactly.
that short-term rentals, when you invest it the right way, the cash flow you get from the short-term rentals will help you accelerate that growth at the very beginning,
Yep.
where now you can grow at a much faster clip. You can grow, you can accelerate that growth, achieve those freedoms. If you're not already, don't already have those freedoms, it can help you get to financial freedom a lot quicker. It can help you get that snowball rolling down much faster. And again, when you get to a point when it gets substantial, absolutely diversified. Let's face it, right? Short-term rentals, vacation
Yep.
rentals are risky. Doesn't matter what you say, they're risky. They're definitely marginally more work than multifamily, but the
Yep.
return on that time and effort you put in, I personally have seen is significantly better than long-term
Yep.
or multifamily. So,
Yep.
looks like we're on the same page. Looks like you've realized this. I started the same way, just so you know. I started off looking to invest in multifamily. And then I
Okay.
realized that multifamily would not really help me build up momentum really quick for two reasons. One, I had a full-time W-2 job. When you have a full-time W-2 job, you don't necessarily get the write-off from a multifamily on your W-2 against your W-2 income, which is the highest taxed dollars you will ever
Yep.
earn in your life, right?
Yep.
So the tax write-off was a big reason I actually started, and I realized with multifamily, I would have to keep that on the passive side. I couldn't write off my W-2 income. So
Yep.
there's a lot more to it there, but the short-term rentals have a loophole, right? Which allows you to write this off against your W-2 income, which is your highest tax dollars. So very soon, getting into and trying to do multifamily, very soon after I realized I can't get the write-off. And if I can't get the write-off, what else can I get the write-off on? And the short-term rentals came up. When I looked at short-term rentals and started going down that path, I realized, man, this cash flow is actually spectacular. You can have
Yeah.
3 units or one short-term rental, and the short-term rental cash flow is better than that. This was again a few years ago, but that was the case, and I very quickly said, I'm still in the growth stage. I am 43 right now, and this is about 4 years ago that I actually started. So I immediately
Okay.
started. I'd already bought one long-term rental. No, I'd already bought two long-term rentals by then, and the cash flow was a few $100s. But the vacancy and then the even the smallest repairs basically took away the cash flow for the month or for the year, right?
Right.
Um, for example, I have an HVAC system being replaced at a property today, but it's a midterm rental, which is a furnished rental for 90 days, which is
Mm-hmm.
luckily for me pays as good as a short-term rental. So I'm not losing sleep over spending 10 grand on an HVAC system today because
Right. Yep.
it cash flows really well. In fact, the way I look at it is that
Mm-hmm.
the HVAC system is actually a great investment for me because now we put it in and the system needed to be replaced anyways, and I'm not losing sleep
Yep.
over if my annual cash flow is wiped out because of this. So what happens is when
Yep.
you combine this cash flow that you're getting, the increased cash flow from it, plus the tax savings I was able to get from the W-2, right? So all I did,
Yep.
hey, let's take the cash flow, let's take the tax savings, let's add a little more and buy the next property. It
Yep.
starts to roll really quick. So I actually do this whole 10-year projection. It's like a waterfall projection thing that basically takes year one, um, cash flow, depreciation, or the write-off, additional equity, to build out a 10-year projection as to how this snowball looks. It's like a snowball sheet. So, for example, hey, I want to get to $50 million in 10 years. What's it going to take to make that happen? And as long as I keep executing to that plan, I know I'm going to hit that target. So this is how
Yep. That's
the,
awesome.
the coaching we provide people is exactly this. This, how do you get from where I am to this target? What am I going to need to achieve every single year, year after year? And what is the muscle I need to build and the discipline I need to build? Because you and I both agree, you have an X place you want to be when you're 50, right?
Yep. Yep.
If you have that vision, it's all about painting that picture in between and figuring out how you're going to get that rolling. So no, that's
Reverse
awesome.
engineering. Yep.
Yeah, yeah, no,
Yep.
that's absolutely spectacular. Great job, great job. So let's change gears a little bit. Um, you obviously are very aligned with my own values and the way I do things. And so, what is it? What is the one thing that you think, hey, if we spoke today, what's the one thing that's in your mind that's bothering you that's like, hey, where do I go from here? What's that one question I can answer for you today right here?
So I would say the biggest thing and it's what I've been working on lately, and that's delegation, building the right systems and delegating. For the longest time, we still have, so we self-managed everything for years, and just as of recently, we've started building our own management team company around what we need. And a lot of that goes to the fact that trying to find third party management companies, they just, a lot of times they're not what you need or expect, or, they have different work ethics than you would like to see. They don't help your properties, at least on the multifamily side. They don't fill vacancies the way I would like. And so we started basically being able to delegate and build our own team around that. And that's been a game changer. And that's one thing right now we're really trying to work on, building a system, building teams, delegation, to be able to grow, to be able to free up some of our personal time to grow, larger.
So when you talk about this delegation you're talking about, because management in multifamily is very different than management on the short-term rental side.
Right.
Side
Yep.
that you're looking to build this on.
Right now, both. Right now, yeah, both. The short-term rental market, as you know, is very hit and miss. I guess it's market dependent. I know a lot of guys that got into it just kind of, there for a while, it seemed like you could buy anywhere and make the numbers work. And then it was kind of this shift that it's like, okay, you got to be in somewhat of a good location. Look at local laws, regulations, as far as them allowing it and licensing. Um, but yeah, so both. I would love to find more short-term rentals.
So I can talk to you about the short-term rental side because one of the things I did. So let me help you understand my journey, right? So about 4 years ago, when I bought my first short-term rental, I decided that I'm not going to build myself another job, right? And
Yep.
I come
Yep.
from a deep consulting background, which is I've worked with a lot of Fortune 500 companies, big pharmaceutical manufacturers, big wholesalers, and helped them put systems and processes in place. That was my
Yep.
job for all these years. And I said, I'm going to start with my first short-term rental. I'm going to focus on systems and processes because I'm not building myself another job. I knew I
Yep.
wanted the freedom to not, I don't want to sit in front of a computer if I don't want to. I want to be able to sit here and talk to Zach all day if I want to talk to Zach all day, right?
Yep. Yep.
Versus responding to guest messages and doing all this stuff all day long. And as the portfolio grows, a lot more happens, right? So
Exactly.
we started with all the systems and processes on day one. And about 80% of that still remains. We keep evolving, right? We keep improving, we keep adding to, but the systems and processes are consistent with what we had on day one. Now,
Yep.
it's taken us 3 years, 3.5 years to kind of get to the point, and we're still continuously a part of, I'll say about 15 to 20% of our time is spent on improving our systems every single day. And what happens is, so what happened along the way is we added to our own portfolio. We've got 9 short-term rentals right now, and we kept adding to our portfolio. And I was coaching at the same time for the last 3.5 years. I coached about 40 people, right, in starting their own short-term rentals. Acquiring
Yep.
them, putting them in service, and operating them and streamlining them, right. So a lot of these previous coaching clients of mine came back to me and said, you build a really good system around managing these properties. Okay. We have no interest in becoming full-time property managers. So if you are willing to take on our properties to manage them, we'd like to give that to you. You know our property, you helped us buy it, you manage it for us, you already have the system and process in place, and we want to go spend our time on acquiring new properties and doing that, right? we're
Yep.
finding it really hard to continue to grow our portfolio while managing the ones we have. So beginning of last year, they started offloading those properties to me. So they came
Okay.
back to me and
Nice.
said, "Hey, can you manage this for us?" So today we're managing a total of, including our own, about 25 properties. I have a team of about 6 VAs in the Philippines. I've
Nice.
got local teams in different areas. They're typically third-party contractors, but these are relationships we've built and we use.
Yep.
So we went from managing our own properties in Texas, Alabama, and Oklahoma to now we're managing properties for other people as well. Like I said, total of about 25, pretty much in all corners of the country, right? We've got
That's
California, we've
awesome.
got Utah, we've got Pennsylvania, um, Florida, we've got Tennessee. So we're co-hosting. We call it co-hosting, right? Because we're not locally on the ground there, managing
Yep.
this for people all over the country. And
That is awesome.
the way we manage this is, it's the same as how we manage our own properties. To my team, it makes no difference whether it's my property or your property that they're managing. It's the same
Yep.
systems and processes that I use for my own properties. We go through everything. The other thing that we do for people is, when we took over this management, a big part of it is direct marketing. We've been building our database on collecting guest email addresses and all this stuff for 3 years. We've got about 10,000 emails in that database now. So we're now getting to the point about 20 to 25% of all our bookings is direct. We get those direct bookings,
Nice.
right?
Yep. Yep.
Which is actually a difficult number, generally speaking, right? Now, again, when I
Yep.
started off this business, the vision was, oh, in 3 years, I want to be at like 70% direct. That was the vision, right? I never
Mhm.
got there. I haven't gotten there yet, but I'll take 20 to 25%. I'm not putting all my, eggs in one basket with Airbnb or VRBO or something like that. We've got a direct booking channel. In fact, we're in
Right.
the process of upgrading our marketing game now. So we're moving our marketing platform into this system called Go High Level. And we're truly going out from a direct marketing perspective, from a rebooking perspective, because I think, when you talk about these markets, when you talk about the economy, you talk about Airbnbs, there's obviously a little dip. And I think the
Yep.
differentiator is going to be when we're able to bring the previous guests back in, and that 3 to 5% dip that there is a little bit, we'll be able to make up for it pretty easily, right? Just
Right.
saving on that fees from Airbnb will save you about 3 to 4% and save the guests almost
Yep.
15%, which means
Yep.
if I can split the difference with the guests, it's a win-win for everyone. So
Right. How
no,
how do you get the sorry, go ahead.
that's where we've come from. So we went from managing our own properties because we had the systems and processes, and attracted all these other people to say, manage our scoop, please, right? Because
Mhm.
I'd rather pay you the money to manage this than to spend my time. I got my big tax write-off. Now the returns I get are good, but if I spend my time strategically going acquiring new properties, I think the return on my time is going to be a lot better. So
Yep.
that's why they kind of handed this off. Sorry, go to your question.
How do you acquire the emails? Where do you
So,
get those from?
so we use a system called StayFi. It's very popular now in the short-term rental space. So if you go to stayfi.com, I can send you a link after this.
Okay.
What we use this, it's like a it's a Wi-Fi system that you add onto your wireless router. So,
Okay.
when you go to a Marriott, right, they say enter your email address to gain access
Yep.
to the Wi-Fi. It's free. There's no
Ah,
password,
gotcha.
but you need to enter the email address to get there. So we end up getting email addresses for every adult who's staying there, right? So now what happens is
Gotcha.
Airbnb, even if you get the email address from them, you're going to get the person who booked. And most of our properties
Right.
are bigger, we sleep 14, 16, 26, right?
Yep.
I want the email address for every adult in there, because the idea
Yep.
is if I can email out of 26, let's say 13 are adults or 14 are adults, if I can email 14 adults versus one, there's got to
Yep.
be there's got to be one or two in there who are thinking, man, that was an awesome trip. I went with those guys and their families, my friends and their families, and we had such a great time.
Yep.
Let me see if maybe I can take my extended family or some other friends or something. Even if Zach, who was with me, didn't really enjoy it as much, I had a great time. So maybe I'll go
Right.
and take some other people with me, right? So
Yep.
you're no longer pitching to that one customer who came and stayed with you. You're now pitching to everyone who came and stayed with you.
That makes a lot of sense. Yep. That's
So
awesome.
I'll send you a link after this call to get you to the right place and help you understand what that takes to set up. It's very easy, right?
Okay.
The key is all you want to do in the beginning, at least the first couple years, right, is to start collecting it. And because we had
Yep.
this vision from day one that we're
Yep.
building a brand, our brand is called Adventure Awaits. And it's, our website, you can take a look at it. It's called aastays.com. If you go check it out, you'll find, again, there's all these properties, and we're putting all our properties that we manage as well on there, right? So it becomes a marketplace. People go there and look at it. What we've done for the last 3 to 4 years is collect the email addresses and do gentle marketing. We basically, we've got about 1,000 followers on our Facebook page. We've got some followers on Instagram, but we've been gently touching people so that there is some engagement. Now,
Yep.
we've got the email addresses. Now, if we amp up our email marketing game a little bit, we're now going to be touching 10,000 email addresses and saying, come back and stay with us, right? We already do
Yep.
that, right? We don't push it too hard. We do it, but we're about to get it to the next level. So the first couple years, you're not going to see much traction because you're only going to have a handful of email addresses. Maybe you can get people to come back and rebook, but that's not going to be a huge marketing effort. But if you have the vision
Yep.
that that's my goal, that's where I want to go, you're going to be able to collect those email addresses now on, and it's going to pay off 3 or 4 years from now. So you're literally going to pay for the StayFi device and the subscription for like 3 or 4 years, but the long-term gains are absolutely critical.
That's awesome. Yep. That makes a lot of sense.
Yeah. So yeah, that's
Very cool.
basically where we're at in our business right now.
Nice. Nice.
So
Very cool.
so these, you were talking about processes and systems so I can absolutely help you out with the short-term rental side of things. We
Yep.
obviously have a full, there's a tech stack, there's processes, there's SOPs that need to be put in place. The number one question that I'm going to ask you to think about in that space is, how big or how small is this going to be? Are you going to
Right.
build out a full short-term rental property management type of a business? Or, hey, I just want to put something in place so that I can manage my 3, 4, 5 properties, or whatever it is.
Yep. Yeah, it would probably be the latter. It would probably be we want to add more short-term rentals, but probably more for the lifestyle asset, I think is what you called it. Other than that, we're focusing on a couple different ventures, specifically surrounding multifamily. But I do like the short-term rental market and the asset class. I think it's here to stay. As we saw through COVID with the hotels and the just all the closures and stuff. I guess that's was a big boom for Airbnbs, VRBOs. And so we definitely want to add more to our portfolio in the coming year.
So yeah, I mean, I don't think short-term rentals are going anywhere, right?
No.
Because what happens is we change the buying pattern of the consumer during COVID.
Yep.
People realized, and this is why I like larger properties, just so you know, is people realize that I may not be able to go on a vacation somewhere, but all I need,
Exactly.
what am I looking for when I go away from on vacation, is basically reconnecting with friends, reconnecting with family. It's reconnection, right?
Yep.
And we triggered this thing in people where they started valuing, because of COVID, they started valuing the outdoors a lot more. They started valuing spending time with friends and family a lot more. And they started
Yep.
finding more peace in togetherness versus, hey, let's go party in Vegas, right? And
Right.
that's where
Right.
it changed the buying patterns, where people realize this. And what's even happened is, I think this is going to grow exponentially, because the kids who went on these vacations with their parents during COVID, 5 years from now, 10 years from now, are going to be grown-ups, go get a job, and they're going to think about this and say, man, that COVID time, I spent all this time with my family,
Yep.
we travel. The buying patterns have
Yep.
been altered, because whether or not we agree, there's something that happens in our subconscious mind when you go have a good time, right? It's creating a
Exactly. Yep.
sensation that is going to last. So anytime you think about going on a good time, I'll give you an example. During COVID, we did something different. We rented an RV. Actually, we had a camper and we drove around the country. We did 13 states. We did like 9,000 miles, and we were on the road for like 3 months, right?
Yep.
Even till date, my 9-year-old says, "Can we go buy an RV and do that? We do the road trip. We can homeschool." Because that's
Yeah.
what we did back then, right? That's one of
Yep.
my favorite things, right? So it's like
Yep.
that. There's that sensation created during that time of togetherness that'll never go away. So the buying
Exactly.
patterns
Yep.
change, and people have realized that it's way better to find a place that we can hang out and do things together versus, hey, go stay in 4 hotel rooms and basically go out and eat,
Yep.
drink, and roam the streets or whatever it is, right? So yeah, that's changed. So I agree with you. I'm a big believer in the space. Definitely more risk, but I do hope that someday I'm going to diversify into other asset classes. But this has been absolutely a game changer for me. It's changed the trajectory of my life, and that's actually the whole purpose that we're doing this podcast. The whole purpose we're doing the coaching and the programs we're coming out with. Um, you know, because we think we can impact a lot of people's lives doing this. There's a lot of people out there who are waiting and wanting to do this, but just can't see the path or don't know and understand, how do I get from point A to point B? How do I really make this happen? How do I execute on this? How do I truly make this dream come true? So that's why we're doing this
Yep.
whole podcast. And our website is the same. It's called Vacation Rental Mastery. We're launching in April. Courses, coaching programs, things like that. We're going all out and making it available to a way bigger audience. Let's go change some lives.
That's awesome. Very
Yeah.
cool.
Awesome, man. So, Zach, thank you very much for your time. I really had a great conversation. I love the fact that, there's so many similarities, and I found this to be a theme. Almost anyone I speak with, this whole thought of freedoms keeps coming up,
Yep.
right?
Yep. That's it.
Everyone thinks financial freedom is going to bring liberation. Financial freedom is going to bring the sense of being, right? But it is
Exactly.
financial freedom, but you take the money you make and you go make those other freedoms happen, which is time freedom,
Right. Yep.
location freedom.
Yep.
You're doing that right now. You're in Florida. You're able to go do this. You're able to stay there part of the year because you created that freedom for yourself. Time freedom is going to pay for it, or financial
Yep.
freedom is going to pay for it, but you're able to get time freedom from it. You don't have to work. You don't have to speak to me if you don't want to, right? You're not
Yep.
forced to go work for someone because you need a paycheck.
Exactly.
And,
Yep.
and you can deal with who you want, relational freedom right there, right?
Yep.
And then we're talking about impact freedom. You got to start thinking, and that's what I'm doing, is how many lives can I impact with this? I
Yep.
just look
Yep.
back and I say, I've coached about 40 clients in the last 3 years. It's been one-on-one coaching, personalized coaching. 40 clients is I've impacted on an average about 160 lives, right? It's family of 4 typically, or 3 to 5, and
Yep.
it's 160, 150 to 200 lives is what I've impacted. And then they go
Yep.
help their friends, they do all this other stuff. What if I could open this up and impact a much bigger audience, which is why we said, let's
Exactly.
go and launch a course and do this. So that impact freedom, right? So you're in a great spot, man.
Yep.
I applaud you for being able to do what you've done with a clarity and mindset at only 36. I can only imagine where you're going to be at when you're 50, man. It's going to be unbelievable. So thank you very much for being
Yep.
on the podcast. I really enjoyed this conversation, and I'm really sending you positive vibes to make this a reality come in the next few years. You're going to do awesome. Thank you very much for being here.
Thank you. I really appreciate it.
Thank you for joining us on Vacation Rental Mastery. Don't forget to subscribe and tune in for our next episode, where the journey to financial freedom and lifestyle flexibility continues. Here's to your success in the exciting world of vacation rentals.